There is a moment in every financial era when a single person, a single decision, and a single belief expose the weakness of the system that everyone trusted. And in this decade, that moment belongs to Michael Saylor. Not because he was loud, not because he was controversial, but because he was right at a time when every major institution, insisting otherwise, had everything to lose if he proved them wrong. To understand why he is being quietly erased from the Nasdaq spotlight, you have to go back to the beginning, not to Bitcoin's origin, but to the exact moment when confidence in the US financial system quietly cracked. The year was 2020. Markets were shaking. The Federal Reserve was printing money faster than any moment in modern history. The official narrative said this was temporary, safe, controlled. But Saylor didn't buy the narrative. He saw the money supply exploding, he saw inflation coming like a slow, moving tsunami, and he knew that cash was becoming a melting ice cube. Most CEOs did nothing. They sat quietly, waited for the storm to pass, and hoped their treasury departments could handle whatever came next. Saylor went the opposite direction. He took a company he had spent 3 decades building, a company that had survived the dot-com crash and the 2008 financial collapse, and made one of the boldest treasury decisions in the history of American business. He converted MicroStrategy's cash reserves into Bitcoin. Not a portion of it, not a hedge, not a small allocation to experiment. He committed. And that commitment terrified the financial world. Because when a publicly traded company makes a decision like that, it forces banks, fund managers, and regulators to ask questions they don't want to ask. Questions about money printing. Questions about inflation. Questions about the stability of the dollar. And most importantly, questions about whether a decentralized digital asset was now a better store of value than the currency the world had been built around. Wall Street wanted him to fail. They needed him to fail. If his bet succeeded, it would mean the system they controlled was weaker than a technology they spent a decade dismissing as a toy for criminals and speculators. They mocked him. Analysts wrote articles calling him irresponsible. Journalists on CNBC rolled their eyes at his interviews. Hedge funds shorted MicroStrategy, hoping to watch his company collapse under the weight of his conviction. For a while, it looked like they were right. Bitcoin crashed. The headlines turned vicious. MicroStrategy's paper losses soared into the billions. The same media outlets that ignored corporate fraud for years suddenly treated Saylor like a reckless villain. It wasn't enough for him to be wrong, they wanted him destroyed. But something strange happened. The crash didn't break him. It didn't even shake him. While others panicked, Saylor doubled down. He bought more Bitcoin. He defended his thesis publicly. He spoke openly about inflation, about the weakening dollar, about the silent tax eating the savings of every working American. This conviction, the same conviction they mocked, started looking less like madness and more like clarity. And then the financial world began to shift. Institutions that once rejected Bitcoin started embracing it. BlackRock applied for a Bitcoin ETF. Fidelity opened Bitcoin access for clients. Major banks that spent years attacking the asset suddenly called it digital gold. Governments, banks, and regulators realized Bitcoin wasn't going away. In fact, it was becoming stronger. Bitcoin recovered, then it surged. And every dollar it climbed, every milestone it reached, every new institutional adoption that entered the market made Saylor's once ridiculed decision look like the most brilliant corporate treasury strategy of the decade. MicroStrategy didn't just recover, it exploded. Its stock price outperformed almost every major tech company. It rose so fast and so consistently that analysts struggled to explain it. The same people who once mocked Saylor fell silent. There were no apologies, no corrections, no retractions. Just silence. But silence in finance is never innocent. Because while retail investors cheered, something else began happening behind the scenes. Something subtle, something quiet, something coordinated. The kind of thing that only happens when someone becomes too influential, too correct, or too disruptive for the system to comfortably contain. MicroStrategy's dominance wasn't celebrated. It was treated like an anomaly. The company wasn't framed as innovative, but as non-traditional. Index committees began discussing whether MicroStrategy fits the criteria for certain Nasdaq-linked indexes. Analysts began referring to the company not as a tech leader, but as a Bitcoin exposure vehicle, as if that invalidated its legitimacy rather than proving its foresight. Platforms adjusted classifications. Risk models were recalibrated. Media coverage slowly reduced. Mentions of Saylor's name began declining even as the company he led outperformed iconic Nasdaq giants. This wasn't natural. It wasn't accidental. It wasn't random. When someone threatens a narrative, especially a narrative as old and as powerful as the superiority of the US dollar, there is always a response. And the response rarely comes loudly. It comes quietly, slowly, strategically. Because if Michael Saylor is right, then every institution that dismissed Bitcoin is wrong. Every economist who downplayed inflation is wrong. Every regulator who ignored monetary expansion is wrong. Every bank that mocked digital assets is wrong. If Saylor is right, the financial order built on endless debt and endless money printing begins to look fragile, flawed, unsustainable. And that kind of truth can't be allowed to spread too far. So the pressure doesn't come as accusations. It doesn't come as investigations. It doesn't come in the form of public attacks. It comes as erasure, as quiet distancing, as a soft removal from the mainstream financial spotlight. Not because he committed fraud, not because he broke rules, but because he succeeded in a way the system did not approve of. For decades, the markets rewarded compliance, not rebellion. But Saylor rebelled, not with protests or politics or ideology. He rebelled with numbers, with data, with a decision that proved the system itself was weaker than advertised. And when you show the world that a decentralized digital asset can outperform trillion-dollar institutions, you no longer threaten a company, you threaten an empire. This is the context behind the quiet removal, the reclassification, the narrative shift. This is why platforms began subtly separating MicroStrategy from the Nasdaq identity. This is why analysts reframed the company as too correlated to Bitcoin. This is why mentions in mainstream outlets became shorter, less frequent, less enthusiastic. They weren't punishing failure. They were punishing success. Because success, when it exposes systemic weakness, becomes dangerous. Michael Saylor didn't just buy Bitcoin. He demonstrated a fundamental problem with the US financial system in real time. He showed that a publicly traded company could outperform not through debt, not through buybacks, not through financial engineering, but through abandoning the system's core dependency, the dollar. And that is the kind of victory a fragile system cannot tolerate. He wasn't erased because he was wrong. He wasn't silenced because he made mistakes. He was minimized because he showed millions of people what the system never wanted them to see, that there is a way to protect yourself from inflation without waiting for institutions to save you. That is the story behind the quiet removal, the fading mentions, the subtle distancing. It is the story of what happens when someone becomes too right, too early, in a world where truth is dangerous if it threatens power. When a financial system feels threatened, it never announces its fear. It behaves in shadows through quiet corrections, revised classifications, subtle policy shifts, and narratives crafted not to alarm the public, but to guide them gently away from uncomfortable truths. And that is exactly what began happening once Michael Saylor's conviction started turning into undeniable results. Bitcoin didn't just rise, it reclaimed its dominance. It pushed through resistance levels that analysts insisted would never break. It survived regulatory pressure, media attacks, and political scrutiny. And every time Bitcoin survived, Saylor survived with it. Every milestone, every rally, every new institutional entry made his initial decision look less like a gamble and more like strategic brilliance. But brilliance is something markets celebrate only when it aligns with the direction of power. When brilliance threatens that direction, it becomes something else. A problem to be managed, controlled, or quietly removed before it inspires too many followers. MicroStrategy's success created a dangerous possibility. What if other public companies watched Saylor and decided to protect their treasury reserves the same way? What if more CEOs realized that cash was losing value and Bitcoin was preserving it? What if corporate America, slowly, quietly, began exiting the dollar system from the inside? That was the nightmare scenario for central banks, because the stability of the modern financial system is built on trust. Trust that cash is safe, trust that inflation is manageable, trust that the dollar will forever remain the global reserve currency. If too many companies begin acting like Michael Saylor, that trust fractures. And when confidence breaks, systems collapse from the inside. This is why the response to Saylor's success was never public. It was systemic. It began with analysts. Reports started framing MicroStrategy not as a company, but as Bitcoin exposure wrapped in a corporate shell. They tried to separate the business from the value it created, as if the company had committed a crime by outperforming its peers. Then came the risk models. Traditional market indexes began treating MicroStrategy as non-standard, the kind of classification usually reserved for companies facing legal issues or extreme instability. But MicroStrategy wasn't unstable. Its financials were strong, its operations were consistent, and its debt obligations were structured intelligently. The only thing unusual was that the company had attached itself to an asset the establishment spent years calling dangerous. And then came the narrative shift. Financial media began speaking less about Saylor's strategy and more about the risks of corporate Bitcoin adoption. Every time MicroStrategy set a new record, the story was not about its performance, but about the volatility investors should fear. They wanted the public to see success as something unstable, something unnatural, something that didn't belong within the world of traditional finance. It wasn't just Saylor being minimized, it was the idea behind him. Because ideas are far more threatening than individuals. Ideas spread, ideas inspire, ideas make others question what they're told. And Saylor's idea that money printing was destroying the purchasing power of the dollar and Bitcoin was the most rational defense was spreading too fast. Institutional investors knew it. Regulators knew it. Governments knew it. And the Nasdaq certainly knew it. Behind closed doors, index committees discussed whether MicroStrategy's profile no longer aligns with the purpose of certain Nasdaq baskets. The phrasing was vague on purpose. The markets love vagueness. It hides intentions behind neutral language. But the meaning was clear. A company that outperformed too aggressively, too unpredictably, and for reasons the system didn't fully control, was no longer a comfortable fit. And the deeper Bitcoin went into the mainstream, the more pressure grew to contain the narrative that Saylor's decision represented. Containment doesn't happen through censorship. It happens through repositioning. You don't attack the person. You remove the spotlight, You reshape the context. You let the audience drift away naturally without realizing they're being guided. Mention him less often. Exclude his company from certain analyst reports. Classify it as an outlier. Call it non-standard exposure. Direct attention to ETFs instead, products fully controlled by institutions. In other words, replace the rebel with the regulated. It worked on a surface level. New investors entering Bitcoin did so through Wall Street products. ETFs, custodial platforms, institutional brokers. These products gave the financial system control over the narrative and over the flows of capital. And in that world, MicroStrategy became a competitor, not a participant. There is something poetic about the timing. The moment Bitcoin became legitimate in the eyes of the powerful was the same moment Michael Saylor began fading from the financial narrative. The man who carried the asset through its darkest years was being reduced to a footnote, while institutions who once attacked Bitcoin were now positioning themselves as innovators. This wasn't coincidence. The financial world has a long pattern of absorbing disruptive technology, sanitizing it, and then removing the original rebels who brought it to life. The early internet pioneers were pushed out by corporate giants. Early social media creators were replaced by billion-dollar platforms. Early crypto advocates are now overshadowed by regulated financial products. And now, Bitcoin's loudest corporate advocate was being treated as a relic, useful when needed, inconvenient once institutions took control. But the story doesn't end with narrative control. Because once a system begins minimizing someone, it often escalates into structural exclusion. Not dramatic exclusion, not public removal, but quiet adjustments that change how the market perceives and values the company associated with them. MicroStrategy's weighting in certain indexes was adjusted downward. Analysts began using language like unsuitable for traditional portfolios. Some risk models treated MSTR as if it behaved like a leveraged asset, despite the fact that dozens of tech companies with weaker fundamentals faced no such labeling. Brokerages flagged the stock with warnings. Retail investors saw risk alerts where none existed before. It wasn't an attack, it was soft pressure. Soft pressure works because it doesn't need evidence. It doesn't need justification. It only needs repetition. If enough platforms hint that something is unstable, people treat it as truth. And if enough analysts say a company no longer fits, the market begins to believe it, even when the company's performance proves the opposite. This is the quiet mechanism by which someone gets erased. Not overnight, not publicly, not with accusations, but through slow, persistent redirection of attention. The system doesn't want Saylor gone because of who he is. It wants him gone because of what he demonstrated. His Bitcoin strategy didn't just protect shareholder value, it embarrassed powerful people who spent years insisting Bitcoin would never reach this point. He didn't just win a financial bet. He exposed a structural weakness in the global monetary system. And once you expose a weakness that big, the system has no choice but to protect itself. Saylor's victory wasn't just financial. It was symbolic. It showed that individuals, companies, and entire institutions could defend themselves from inflation without relying on central banks or government policy. It showed that the most powerful asset of the 21st century didn't come from Wall Street. It came from a decentralized network no one could control. A system built on control cannot tolerate that message, and so the removal begins at the edges. Small adjustments, quiet revisions, gentle reclassifications, a slow erosion of influence, not enough for the public to notice, but enough for insiders to understand. This is how the financial order preserves itself, not by defeating its critics, but by outlasting them, overshadowing them, and ultimately removing them from the frame. But there is something the system did not expect. The more they minimized Saylor, the more people became curious about the reason. The more they labeled MicroStrategy as too aligned with Bitcoin, the more investors began asking why the alignment mattered. The more his victories were ignored, the more obvious the avoidance became. You can erase a person from a narrative, but you cannot erase the truth that person revealed. And the truth Saylor revealed is simple: when a government prints too much money, the value of that money collapses. When inflation becomes structural, savings become weaker. And when trust in the traditional system fades, people seek alternatives. Saylor did not create Bitcoin's rise. He simply recognized its inevitability. And in doing so, he challenged a narrative the system fought desperately to protect. That narrative is now cracking. And cracks, once they form, only grow wider. The most revealing part of this story isn't how Michael Saylor made his Bitcoin decision. It isn't how MicroStrategy survived the volatility or how the stock exploded. It isn't even about the quiet erasure that began creeping through financial media and Nasdaq classifications. The real story lies in what the system was trying so hard to prevent people from noticing. Because while everyone focused on Bitcoin's price and MicroStrategy's balance sheet, something much bigger was happening beneath the surface of global finance. Something that made Saylor's success not just inconvenient, but dangerous. Governments around the world were grappling with the same uncomfortable truth: inflation wasn't temporary, debt wasn't manageable, and the decades-long strategy of creating money to solve every crisis was starting to hit its limit. Investors saw the numbers, savers felt the pain, corporations noticed their cash reserves shrinking in real value year after year. Saylor saw it earlier than most, And when he moved, he signaled something institutions feared more than inflation itself. He signaled that the system had alternatives. Alternatives are existential threats. If people believe there is no alternative, they tolerate inflation. They tolerate currency debasement. They tolerate shrinking savings and rising prices because they feel they have no choice. But once a credible alternative appears, the entire structure of monetary power begins to shake. Bitcoin wasn't just an asset, it was an exit door. And Saylor, with a single corporate decision, pointed millions of people directly toward that exit. That alone was enough to make powerful entities uncomfortable. But the uncomfortable truth became unavoidable when the numbers started revealing a pattern. Every time institutions tried to push Bitcoin down, it recovered. Every time media outlets dismissed it, adoption grew. Every time regulators tightened their grip, the network became stronger. And every time Bitcoin survived, Saylor's bet looked smarter. This wasn't a financial victory, it was a narrative victory. And narrative victories are the most dangerous of all, because they change behavior. Retail investors started shifting small portions of their savings into Bitcoin. Hedge funds began exploring exposure. Corporations looked at their cash reserves and asked the same question Saylor asked. What is the point of holding an asset that loses value every year? This is where the pressure escalated, not publicly, but structurally. Analysts began isolating MicroStrategy from tech sector comparisons. It wasn't allowed to sit next to companies it outperformed. It wasn't given the same weight in indexes as peers with weaker fundamentals. Its classification shifted toward a single asset correlation, as if that somehow disqualified it from being a legitimate corporation. This wasn't random, it was strategic, because if MicroStrategy remained fully embraced by Nasdaq as a normal tech company, other companies might copy it. They might convert their balance sheets. They might protect their reserves. And if that happened at scale, the US dollar's dominance would face its first organized challenge from the corporate sector. No government, no central bank, no financial exchange wants to witness that moment. So they didn't attack Bitcoin. They didn't attack Saylor. They attacked the connection. The bridge between corporate America and decentralized money. That bridge was MicroStrategy. Erase the bridge and fewer people follow. This is the logic behind quiet removal, behind reclassification, behind narrative minimization. The system's power doesn't come from force. It comes from the illusion that the system is the only viable option. Bitcoin broke that illusion. Saylor amplified it. And when something threatens the worldview that markets depend on, the markets respond with silence, not confrontation. But silence has side effects. Investors noticed the discrepancy between MicroStrategy's performance and its treatment. Retail traders asked why the company was being downplayed when its returns surpassed giants. Independent analysts began publishing reports showing how MicroStrategy's balance sheet was stronger than companies with far higher index weightings. This created a new problem for the establishment. The erasure itself became suspicious. Whenever the system tries to hide something, people look closer. Whenever narratives seem artificially coordinated, audiences grow curious. And curiosity is the one thing powerful institutions cannot fully control. As Bitcoin's acceptance grew, so did questions about the way Saylor was being sidelined. Why was the man who made the most successful treasury decision of the decade suddenly treated like a footnote? Why was the CEO who explained inflation more accurately than the Federal Reserve no longer a central figure in financial media? Why did the Nasdaq slowly distance itself from a company performing better than nearly every other stock in its category? The answers lead to a truth that few want to confront. Saylor's success was proof that you don't need the system to outperform the system. That message is explosive. Because the modern financial world is built on dependency on banks, on central policy, on currency stability, on institutional wisdom. When one man, one company, one decision breaks that illusion, it threatens the foundation that keeps billions of people compliant. A system that depends on control cannot reward someone who demonstrates freedom. This is why the erasure continued even as MicroStrategy reached new highs. It wasn't about accuracy, it wasn't about risk, it wasn't about classification, it was about containment. If Saylor's strategy continued to inspire corporate leaders, the financial system could face the beginning of a structural shift, a transition away from the dollar-centered balance sheet model toward a decentralized reserve model. That shift would take years. But the first step, the spark, had already been lit. Rather than extinguish the spark, the system tried something else. It tried to isolate it. Pretend E is irrelevant. Pretend MicroStrategy is an anomaly. Pretend the success doesn't matter. But the numbers didn't cooperate. As Bitcoin adoption accelerated worldwide, as countries discussed sovereign Bitcoin strategies, as institutional ETFs attracted billions, the one company that entered the market before everyone else became impossible to ignore. MicroStrategy didn't just hold Bitcoin. It became the symbol of the first corporate escape from inflation, and symbols have a power that cannot be erased. Even if you remove a name from headlines, the message remains. Even if you downplay a company, its performance speaks louder than the silence surrounding it. Even if you adjust classifications, you cannot change the reality that a single decision challenged a multi-trillion-dollar system. This is the real reason behind the quiet removal Saylor won the bet his critics hoped he would lose. He exposed the flaws they hoped would stay invisible. He embraced the future they tried to delay. And when someone is right too early, the system treats them like a threat, until the world eventually catches up. The irony is that erasing him only strengthens his message. It proves his point. It confirms what he said years ago when no one believed him. That inflation would erode cash, that money printing would accelerate, that Bitcoin would evolve from a speculative asset into a global store of value. The establishment's reaction is not a sign of his failure. It is a sign of their fear. Fear that people will follow him. Fear that companies will copy him. Fear that the next financial era will be shaped not by central banks, but by decentralized networks that cannot be controlled. And in that future, the people who sounded the alarm early are remembered not for the years they were ignored, but for the truth they revealed before anyone else saw it. Michael Saylor is not being erased because he was wrong. He is being erased because he was right. At a moment when the system needed everyone to believe he was wrong, his story is not the end of a narrative. It is the beginning of a shift already underway. A shift the system can slow but cannot stop. Because once people see the cracks in the structure, they never look at the structure the same way again.